Hi everyone, it's Paul Brown here from Wealth 21. In this short video we're going to be covering the various different types of superannuation contributions. So firstly and importantly, any information in this video is just general information only. It doesn't take into account your specific circumstances. So if you are looking at super contributions in your case, please seek advice from us or a qualified financial advisor before making any decisions on those contributions. So firstly, let's just look at the different types of super contributions, some of which we'll cover in this video. So there's concessional contributions, okay? There's non-concessional contributions, and there's various different special purpose contributions, downsizer contributions, personal injury contributions, and lifetime CGT cap contributions, which typically relate to small businesses. But what we're going to cover briefly in this video is the downsizer contributions. Okay, firstly, let's look at concessional contributions. So these are typically employer super guarantee contributions, salary sacrifice contributions, or personal tax deductible contributions that you're adding to super. So usually these contributions are taxed at 15% when they're received by the super fund. The exception is the personal tax deductible contributions, where tax is generally not deducted on those contributions until the super fund receives a notice of intent that you are going to claim a deduction, and then they deduct the tax at that point. So the concessional contribution cap in this current financial year is $27,500. That amount gets indexed or increased periodically. So eligibility for these sorts of contributions is up to age 67, or it could be up to age 75 if you satisfy the work test and you're still actively employed. So one of the other things to be aware of is you may have access to the unused concessional contribution cap amount. That is, if you haven't used all of the $27,500 or the previous cap in the past 5 years. So there'll be an amount available to you that is subject to your total super balance being less than $500,000 though at the 1st of July 2022. So that could be handy if you're looking to make a deduction greater than the $27,500 in 1 year though. So next we'll look at non-concessional contributions. So these are typically personal contributions added to super where you're not claiming a tax deduction. There's no tax deducted on these contributions when they're received by the super fund, and the non-concessional contribution cap is currently $110,000 per year in this current financial year. That is subject to your total super balance, accumulation pension, being less than $1.7 million. So if you've got more than $1.7 million at 1 July 22, you're not eligible to add non-concessional contributions. Okay. Now you may also have access to the 3-year bring forward rule for non-concessional contributions, which gives you an increased cap of, effectively 3 years worth of contributions in 1 year. So you could put up to $330,000 in. Now that cap reduces if your total super balance exceeds 1.48 million. So again, if you're not sure what the cap is, always seek advice. So eligibility for these sorts of contributions are also up to age 75. Okay, so the third type of contribution we're going to look at today is the downsizer contribution. And this is a contribution of up to $300,000 per person or $600,000 per couple from the proceeds of selling their home. Okay, so the age was actually reduced in January 2023. So people aged 55 or older are eligible to make a downsizer contribution, and there's no upper age limit. Okay, so the contribution has to be made within 90 days of receiving the sale proceeds, and you need to provide a form to the super fund to notify them that it's a downsizer contribution. Okay, so this sort of contribution doesn't count towards the non-concessional cap, and it's not restricted by the total super balance of $1.7 million either. So there are various conditions to satisfy to make a downsizer contribution. The main one though is the residence that you've sold has to have been owned for at least 10 years prior to sale. But there's various other conditions as well. Please let us know or contact your accountant if you want some more details on those conditions. So finally, I just want to encourage you to seek professional advice. The contribution cap rules and the eligibility conditions can be complex. So a few things to check. Excess contributions or contributions over the caps are often subject to penalties, or you might have to repay the money. So it's good to avoid that. So we'd encourage you to always seek advice from us or a qualified financial advisor or your accountant to confirm the caps that apply before adding super contributions. So there we go, there's a summary of super contributions. Superannuation, of course, is in the news a little bit at the moment because the government is looking to reduce some of the tax concessions that apply on superannuation for people who have very large balances. We'll cover that in a little bit later when we have more details. But if you do have any questions on super contributions or you need some advice, please give Kylie or myself a call or send us an email and we'd be happy to help. Thank you.